A pioneer in public finance since 1955, Ellers helps clients build outstanding places to live, work, learn, and play by delivering focused, fully integrated financial advisory services. We work with more than 1,500 local governments, schools, development authorities, and public agencies, placing their needs and best interests at the heart of everything we do. We help our clients navigate all facets of public finance, including financial management planning, economic development and redevelopment, debt issuance and management, investments and treasury management, and arbitrage consulting. At Ellers, we believe strong communities aren't simply the result of transactions. They're the result of people. We build strong, long-lasting client relationships, collaborating with your staff to complete projects and drive new initiatives forward. Building strong, vibrant, and sustainable communities. Together, it's what we do. For more information, call us at 1-800-552-1171 or visit ellers-inc.com.
Good morning, everyone. Thank you for joining us today for Ellers' virtual update on the state's biennial budget process and other matters of interest to local governments. I'm Todd Taves, Senior Municipal Advisor with Ellers, and I'll be serving as your moderator today. Before I introduce our guests, I have 3 housekeeping items to mention. You'll notice in the upper right-hand corner of your screen, there are 2 icons. One is called Live Q&A, and the other is Chat. If you have a question you'd like us to answer as we move through today's presentation, simply open the Q&A tab, type it in, and hit Submit. At the end of the session, we will have time to answer submitted questions. We may also answer other questions as we go through the course of the presentation, so please don't be shy. I know our guests love to get your questions and answer them. You can also have conversations throughout the session with fellow attendees by opening the chat function. While you can submit any question anonymously, we recommend you allow us to see your information so that in the event we're not able to get to all questions today, we can reach out to you directly. Lastly, if at any point during our presentation you notice either video or audio lag, please try refreshing your browser. Now that we've covered those items, let's go ahead and get started. Our guests today probably need no introduction for the vast majority of you, but I am very pleased to introduce Jerry Deshane, Executive Director, and Kurt Watinsky, Deputy Director from the League of Wisconsin Municipalities, who I know have been very busy the last several months following the action in Madison. Gentlemen, good morning, and I greatly appreciate you taking the time out of your busy schedules to be with us this morning.
Well, Todd, we appreciate very much the invitation to be here. Good morning, everyone. Thank you for your time. I hope this next period, 90 minutes or whatever we're going to be at this, I hope it is useful to you. But I want to reiterate what Todd said. If you have questions, by all means, fire them away to Todd. If they're coming up in our presentation, we may not get to them right away. But if it's a good stumper, I really like those, the questions that Kurt probably can't answer. So please make sure you throw those kind in first, please. Before we get started, oh, sorry, Kurt, did you have anything?
I was just going to say, the way it usually works is, Jerry, you send the stumper to me, and then I can't answer it, so I call up Todd, and he helps me out. So we got all 3 people here. Somebody can answer the question. Well,
and it's funny, before we get started, I have to say this about Todd and about the people at Ellers, and it was true. Before the broadcast, Todd and Kurt were having a conversation. There's a piece of legislation on the eventual elimination of personal property tax. And Kurt and I turn to the Ellers people on those things constantly. There's probably not a week that goes by that one of us doesn't fire an email off to Todd saying, can you explain to me what the impact of this is, or does this work? I know they're a tremendous resource to you at the local level, but I want to say that they are a huge resource to you indirectly through state public policy. Ellers is our go-to resource when it comes to anything having to do with tax increment financing, municipal bonding, personal property tax, the list goes on and on and on. So Todd and your team, before we get started, I want to thank you for all that you've given, frankly, to the league and to local government in Wisconsin. it has made a huge difference.
It's our pleasure to help.
So the plan for today, Kurt wrote that down for me. It says, the plan for today, Jerry, stick to the script. Yeah, good luck with that. First of all, we'll give you some league news updates. We've had some staffing additions that are tremendous additions. Then we are going to talk about ARPA, the American Rescue Plan Act. I know a lot of you are wrestling with that. It is the first time in history, the history of the U.S. government, that the federal government will actually be giving a grant to every city, village, town, and county in the state, in the nation. So we're going to talk about what we know. There's a lot we don't know yet, but we will tell you what we know as of today. And then lastly, we'll finish where we normally start, which is an overview of the state budget. Kurt will give you an idea of where we are today, where we're likely to end up when the process is done in June. But as I said, along the way, our real goal here, just as Eller's goal, is to provide you with information that you need. So stop us with your questions as we go along. So first things first, there is a new member of the league's lobby team. We were very excited that we had the ability to bring in a second lobbyist. It's probably been, what, Kurt, 20 years since the league has been able to support two lobbyists. We brought in a woman named Toni Herkert. Toni is a fixture at the state capitol. She's worked for longtime Green Bay area Senator Rob Coles for a very long time. She also worked in the DNR's water division for an incredibly long time. And she has background, she worked at New Water up in northeast Wisconsin. So she is an expert when it comes to water regulation. She is also our go-to expert on ARPA. She's the one that gets she drew the short straw, to be honest with you. She had to read the rules when they came out from Washington. So she is now working with Kurt. Also, we have a partnership with Construction Business Group. Kurt, you want to explain that real briefly? That's another resource for our members.
Yeah, we just want to publicize this tool that we teamed up with Construction Business Group to create last year during the pandemic. It's a website. It's called responsiblewisconsin.com. And what it does, it offers an opportunity for communities to submit evaluations of work that's been performed by contractors. These are public construction contracts. And there is a lack of kind of sharing of information other than if you call up your neighboring community and you say, hey, well, how was your experience with the person who just, or the company that just submitted the lowest responsible bid. So we wanted to set up we started out thinking, could we set up some kind of Yelp for general contractors and that do work on public construction projects in Wisconsin? It's not quite Yelp, but this is pretty close. So it's free for any community to register to participate in this, and you just go to responsiblewisconsin.com. It provides staff and local officials with access to project evaluation form for public works projects. Once you register, you can go on and see if a contractor who's the lowest responsible bidder for you or is proposing to submit a bid, if there's any evaluations in this website for that contractor. Project evaluations are connected to the contractor and available to view by all other local governments. And the survey form that you could fill out would allow staff to weigh in on whether the project was completed on time, within budget, or whether the quality of work was satisfactory. So it should be short to complete the survey, and we want people to do this whether they had a poor experience, which we hope they don't, or whether they have a good experience. And so the more communities that participate in this, the better the information, and it'll just be advantageous for everyone if there's a lot of participation. So we just wanted to make people aware of that. Not too many people are. It's called responsiblewisconsin.com.
And there's no obligations on the city. Oh, sorry, go ahead, Todd.
Sure, Kurt, we had a question is, can a public-owned utility use this service as well?
I believe so. I don't, as long as it's public sector tied in with a municipality, I think it would be available to them as well.
Yeah. And within the four corners, I think Kurt's right, but within the four corners of public sector, the more the merrier. As Kurt pointed out, the more people, the more municipalities, utilities, whatever, the more they fill out the survey, the more information we'll have and the more useful it becomes. All right, Kurt, you ready to move on, first of all, to ARPA? And Kurt has all the answers. There's nothing you could ask him that he doesn't know. Ready, Kurt? Go.
Thanks, Jerry, for setting me up for a complete botch. If we were in the room right now and I could see all the members of the audience, we would ask this dumb question. Is there anyone in here who hasn't heard of ARPA and isn't aware of what we're talking about? So as Jerry said, there's this incredible, this is the third, I think, of federal stimulus dollars that are coming to local governments over the last 12 to 15 months. So and this most recent stimulus package presents municipalities with the most money. So it's direct aid to cities, villages, counties, and towns. $2.3 billion are going to Wisconsin cities, villages, towns, and counties. 1.1 billion of that is going to counties. And then 788 million, almost a million, to entitlement communities. Those are communities over 50,000 in population. They're roughly 21. They're also referred to in the law in this act as metro cities. And there are 21, as far as we know, in Wisconsin and are on the list. So, and then there's about 400 million, 399 million to be exact, available and will be distributed to non-entitlement communities. These are communities under 50,000, which are the vast majority of communities in Wisconsin. And that calculates out to roughly $100 per capita. Now, earlier in the discussion of this act, there was, as it was working its way through Congress, the Congress Research Office prepared a estimate of what the allocations would be for each community, and I know a lot of communities were able to see those numbers. We don't have the final numbers yet from the Treasury Department. Those are expected any day now. Entitlement communities did receive their final numbers, I think, within the last week. So, but we're still waiting for the numbers that apply to most communities in Wisconsin.
Yeah, and bottom line, I know there's been discussion on this. Larger cities, those so-called entitlement cities, they are getting more per capita. There's no question about that. That was because that part of the formula was built based upon a combination of poverty measures, housing measures, and population. Whereas the non-entitlement communities, it was more of a strict population calculation. I'm not trying to make it what it is. Some people are happy about that. Some people are not happy about that. But the bottom line is this is the first time direct money is coming to every local government in Wisconsin.
Yeah, a few points to remember about the process of how this money will be distributed. So there'll be the total amount of money that is allocated to a community will be divided into two payments. The first payment to be occurring for most communities in June, right around, we're anticipating June 11th, halfway through June. That's because the state receives the payment, the total amount of payments that go to communities, non-entitlement communities in Wisconsin. The state will receive that and then turn around and distribute it. DOR is responsible, DOA and DOR are responsible for distributing these dollars to non-entitlement communities. They've informed us and communities that they will distribute the ARPA dollars in the same way they distribute shared revenue payments. So you can expect to receive a payment from the state sometime in mid-June, because they receive 30 days, and the payment was supposed to go out from the Treasury Department to the state right around May 11th or so. And I've not confirmed yet if I don't know if Jerry, if you have any confirmation from the state that they've received that payment from the Treasury Department. So then the second payment would be an equal amount, would be 12 months after the first payment. It might be a little later, but no earlier than 12 months after the first payment. So you get a payment this year in June of 2021, and next year likely in June of 2022. And you have until the end of 2024 to spend this money. So your spending deadline is December 31st, 2024. We get lots of questions about, well, what's it mean to have spent that? And Treasury Department released some guidance about a week and a half ago, 150 pages of a rule, interim rule, and they do address that you don't have to have it actually spent, but you have to have it incurred and designated for a particular project. You have to have,
which I think leads to kind of an important message of the day is you have time. There is time to spend these dollars. I know when unexpected resources, or we all sort of have this pandemic rush, we've got to act. With this one, we're encouraging, the National League of Cities is encouraging, the state is encouraging everybody to just slow down, take a breath, do a process, involve your community, involve your department heads. If you're a city that's large enough to have, a variety of separate departments, but do some planning. I know the Mark Roloff is the manager for the city of Oshkosh. Mark called me up, and the day after Congress passed it, his public works director came in and said, I got it solved for you. I got one well. We need it. The well's 100 years old, and it will cost every dollar that you're getting from the feds. Maybe that's the way to go. Or maybe there are other needs that need to be heard from. But the bottom line is there is some time to walk people through a little bit of a public input process, and then to study the federal guidelines of how the money can and can't be used, because that's important as well. And I see Todd nodding his head. They've looked at those guidelines, and he's probably said, yep, that one's going to trip people up. That one's going to trip people up. Those three are good. You need to work through all of the ins and outs. Sorry, Kurt.
No, that's a great reminder, and that has been our theme when we're having membership Zoom meetings, is to just emphasize slowing down, thinking about this strategically, and looking to see what the feds and the state are going to do with the money that's coming to the state, and trying to take your time, like Jerry just said. Before we talk about, go ahead, Todd.
So kind of along those lines, we had a question came in, and the gist of it is if a municipality uses these funds in a manner which, based on good faith, they believed was permissible, and then it turns out through an audit process or otherwise that there was a misunderstanding or a misapplication of the guidance, what would the recourse be there?
Ultimately, under the law, if you use the funds in a way that's inconsistent with the law, the federal government can ask you to return the funds. And that's sort of the big stick at the end of the process. There are those who are saying there are 19,000 units of local government out there. The likelihood of them fly-specking every unit of local government's paperwork is probably pretty small, but it's a big hammer. I mean, and you don't want to have to explain to your voters in 2 years why you had to take out a loan to pay back some money that you spent in a way that, had you read the guidelines a little more closely, you wouldn't have spent it that way. So it's public funds. We have to be careful. We have to do it by the rules as best we can. I think if the situation you described where you honestly believe you spent it according to the numbers, it's just not prudent for me to say don't worry about it. But I think if you take good guidance, follow that guidance as best you can, the odds of it coming back and biting you in the tail are somewhat less. Kurt or Todd, frankly, Todd, you're going to be advising people on this just as much as we are. What's your take on it? How would you answer that question?
As far as the question specifically, I would agree with you. The key there is if if you've done your diligence, you've acted in good faith. I mean, if it's if you have good reason to do what you did, I think that you're probably in the clear. But this all goes back to the earlier point about having time. I know I've sat through a variety of webinars through the league, through NLC. There was one with GFOA this morning, and a lot of it is the same information, but different organizations, different folks have a little bit different take on certain provisions. And I think it's going to just take some time for this all to sort of bubble up to the top. And I think there'll be a real opportunity here for people to learn from each other as they think through a particular project that may not be perfectly clear as to its eligibility, so that you can have different folks weigh in on that and form a point of view that can then be used as substantiation by other communities considering similar undertakings. So again, I think that's the key there, is don't feel like you have to spend the money in the next 30 or 60 days. Be very deliberate about it. And one of the recurring things I heard on the call I was on this morning is, there really has to be a concerted effort to, tie the uses of these funds back to the impacts of the pandemic. So I think there's going to be a lot about documenting, what the rationale was, what that linkage was. And again, that helps you show that good faith. If you are going through a federal review or an audit, where you're able to show and demonstrate what the thinking was and why you did what you did.
Yeah, and Kurt, by the way, is going to have more to say about record keeping and whatnot. One other thing before I give up the microphone is pencil down the morning of June 23rd. There will be a webinar sponsored by Competitive Wisconsin, but also co-sponsored by the League, by the Wisconsin Towns Association, Wisconsin Counties Association, and the University of Wisconsin. And the reason you've got that big tent together is you can actually share these resources among local governments, among a pool of local governments, or among local governments and nonprofit organizations. There may be some opportunities out there that are just outside your municipal borders, and we want to explore that. So on June 23rd, there's going to be some panel discussions about Wisconsin's long-term workforce needs, quality of life needs, things like that. And give us a chance. There'll be a keynote address by former Governor Tommy Thompson to give you another chance to just sit back and look at this money in maybe a new way. I think, Kurt, we better get back on script, right?
And I'll throw one question out there that came in that maybe you can touch on as you complete the remarks on ARPA. But the question was regarding the ability to use the monies for revenue replacement. And the question is, it's complicated. We're kind of struggling with understanding how you actually figure that out. And the questioner is seeing if there's any insights that the panel has on that.
Yeah, why don't we save that, because we will go into some of the, allowable uses of the money here in a second. So Jerry mentioned slow down and plan. He also mentioned the importance of maintaining records and a method of accounting and record keeping, because there'll be some reporting requirements that go along with the responsibility of spending this money. There's no more to say than be very careful about your record keeping and your kind of explanation for why you chose to spend it in a way that you did. And then there are a couple other, before talking about the allowable uses, there are two other points I wanted to make, and really they came out of DOR. So our Wisconsin Department of Revenue issued a guidance or reminder about a week and a half ago, about the same time as the U.S. Treasury released their guidance. And just wanted to talk about the implications that receiving this money and spending this federal money might have on expense restraint program and levy limits. And their main points are that the main point I took away on expense restraint program is that DOR's statement or guidance confirmed that you can avoid having the ARPA payments disqualify your community from expense restraint program during the year you spend those dollars by using the dollars for a specific purpose, but most importantly, allocating and spending those dollars from a special revenue fund. So creating a special fund for receiving these dollars and allocating those into that fund and then spending it out of that fund instead of your general fund is the way to avoid being tripped up by the expense restraint program. And then the other point that DOR wanted to emphasize and make, and I think most people would understand this intuitively, is that if your community chooses to reduce its levy next year, for example, because it's replacing or using these federal dollars to, I don't know, spend on services they ordinarily use the levy to pay for, that will have ramifications in the future with respect to your levy, because that your base of your levy for the next year will change and will be reduced because your allowable levy under levy limits is based on how much you actually spent the year before. And I mean, how much you actually levied the year before. So just bear that in mind. You don't have to reduce your levy as a result of receiving ARPA dollars and spending those dollars. But if you do, there's ramifications down the road for your levy limits in the future. I don't know. You want to add anything to that, Jerry or Todd? I mean, did I kind of cover that accurately?
Other than a reminder that just keep telling yourself these are one-time funds. I mean, don't use them to accidentally create a long-term hole in your budget, which is what Kurt talks about there. It may look good for 1 year to reduce your levy, but then next year, how do you pay for those services that the levy was funding? The ARPA funds are gone. Where do you go from here? This really is pandemic related. It's emergency related. Keep that thought in mind, and it's one time. Don't look at this as, well, you're just going to pull the chain next year and more money will drop from Washington. That, I'm not going to get into politically whether that'll happen or not, but right now the law says no, that's not what's going to happen. So as public officials, it's certainly not in our interest to plan that way.
Any comments, Todd?
No, I would agree.
All right, so let's just talk about, and I want to avoid spending our entire time on this federal ARPA, but we'll let's just from a kind of a 10,000 foot level go over what the allowable spending areas are for these dollars. So the act itself is divided into 5 categories of eligible uses, and most of you have paid any attention. You've already heard these, but we'll just say them real quickly. You could support public health expenditures. You can address negative economic impacts caused by the pandemic, and you can replace lost public sector revenues. You can provide premium pay for essential workers. And then the big one for a lot of communities is you can invest in water, sewer, or broadband infrastructure. So let's just talk about kind of the 2 that seem to draw most people's attention is, at least the questions we receive, is lost public sector revenue, which the first question that you mentioned. What the rule that came out, the interim rule that came out a week and a half ago, talked about the need to how you calculate your lost revenues. In comparison from the prior year, just before the pandemic, so that would be 2019, to the amount of revenue, general all-purpose revenue, everything combined together from 2019 to 2020 is how you would look. And so instead of looking at individual sources of revenue and saying, oh yeah, my room tax revenue was lower, was reduced, you got to add that's part of the calculation, but you have to include all sources of revenue, and overall, was your revenue reduced from 2019 as a result of the pandemic? And the presumption is that any reduction in total revenue was a result of the pandemic. So you don't really have to prove that that's the case. It's just presumed by the rule. So the other thing I wanted to point out that the interim rule makes clear is what can you do once you calculate your loss, reductions in revenue, and you determine that, yes, your community did experience overall a reduction in revenue? What can you do with that amount of ARPA dollars that can be used to replace that lost revenue? What can you do? You can, and there the rule is quite liberal and broad, and it says you can use the amount of ARPA dollars that you received that are designed to replace lost revenue. You can use that to spend on almost any service that your community would have engaged in, including infrastructure. You could put in a new street, for example. So here is where there's a slight window to be able to use ARPA dollars on infrastructure other than sewer, water, and broadband.
So at this point, I think the advice is, before you make any other plans, do that calculation of lost revenue. And the federal government was frankly pretty accommodating. You can use either your average revenue growth over the last, 3-year period, Kurt?
Mm-hmm.
You can use either your numbers, what revenue's been doing in your community, or you can assume 4.1% per year, which was sort of national growth over that period. So it actually, in the first place, they give you a fair amount of wiggle room. And in the second place, they give you wiggle room on doing the calculation, but then they give you a little more wiggle room on what you can do with the money. So regardless of what you end up deciding to do with it down the road, you really owe it to your community to go through that calculation first, and in many ways to maximize how much money you can assign to lost revenue.
Now the question, Todd, that you first asked was, are there any kind of easier flow charts or cheat sheets for how do you calculate your lost revenue? Because I agree, it's complicated when you read the text of the rule, and they have different formulas in there and stuff like that. I'm not a math guy. I know Jerry was, so I'm going to turn to him.
All the blood just drained out of Todd's face. Did you see that?
No, the only thing I can say is that we're hoping for, some kind of cheat sheet coming out, some other organization or the federal government or National League of Cities. But I can only agree at this point in time that it's fairly complicated the way you calculate it. Todd, do you guys struggled with that as well, or?
Yeah, I mean, I think anyone has looked at the guidance and looked at the formula, it kind of makes you scratch your head. And I think, you're right. We got to do the math. And I think that's just going to take some discovery learning, sort of walking through it. And again, running it by other folks and seeing if, people concur with the calculations.
I will say this as well. Since the pandemic began, our direction at the league level was, hey, whatever our members need, we're going to do that. And if we have to invent something, we're going to invent it. And that's what we'll be doing here. I've had long conversations with Clarence Anthony, the executive director of the National League of Cities, and they're in the same mode. So we recognize that a lot of you are going to look, a lot of you are going to turn to Todd and his team for help with this. We also recognize that there are going to be others that are going to have a million questions. So we will try to come up with as many cookie cutter examples, fill in the blanks. We'll have Kurt on a whiteboard doing graphics, whatever it takes to get us there. Again, I hate to keep banging the weight drum, but we still don't have all of the guidance for the non-entitlement communities. That's the majority of the cities and villages in Wisconsin by a long shot. But we will be working on some pretty straightforward, hopefully to the point of fill in the blank type formulas for you to use. But it's an important thing to do, and it's an important thing to do right.
We go ahead, Todd. Did you have a?
Yeah, we had one question before we move off the idea of the revenue replacement. And that was is if you had a large payment that came into your general fund in 2020, it was something unusual that you wouldn't normally have. Could you still claim a loss in revenue in normal governmental operations? And my thought on that again, it kind of goes back to that definition of governmental revenues. And unless there's a specific exclusion, and there are some exclusions as to what you can have to count or can back out, that that payment could have to be included. So it would depend on what the source was and where it came from. And again, that just goes to the there's a lot of complexities to this.
So Todd, for instance, if a community happened to receive a large donation from a private citizen in that 2019 or 2020, I can't remember if the definition of general revenue, would that be included, or is it more like ordinary charges, fees, and taxes that a community ordinarily levies?
I think the intent is to adjust out for some of those irregular things.
Yeah.
The one that comes to mind is obviously a lot of communities received federal dollars last year under the CARES Act, and
right.
Those types of intergovernmental transfers, those won't hurt you in terms of the calculation, but something. And the question wasn't specific as to the source of the revenue. So again, I think it's going to have to line up with one of those excludable adjustments.
Right. Okay, so then we could just move on maybe to the other kind of where a lot of focus and spotlight of as far as allowable uses of the ARPA money is investing in water, sewer, and broadband. A lot of questions that we received early on, which the Treasury kind of guidance answered was, does water and sewer include stormwater? And yes, it does, most definitely does, and which is great. So that's an expansion of kind of the acts or an interpretation of the language in the act to also include stormwater and green type infrastructure, which usually is done to treat or control stormwater. So, but streets are not, and transportation generally remain not an allowable use of the ARPA dollars.
So stay tuned on that.
Do we know at this point if a community is going to use the dollars for these types of infrastructure projects? Will Davis-Bacon and the other federal contracting requirements apply?
It is our understanding that they likely will. Kurt, am I wrong on that?
I thought I saw that in reading in between the sentences that that would be an expectation, but yeah, we'll have to dig further into that. I hesitate to say firmly, but I recall reading language like we encourage high wages and use of the federal dollars, but I can't remember if it was mandatory.
There certainly aren't any waivers in the bill that would waive current law on those things. But again, stay tuned. Further guidance to come.
And kind of following up on that, what Jerry said, further guidance. So as we speak, Tony on our staff, myself, and others are going over questions we've received by email, or last week we had or maybe it was this week, we had a roundtable discussion with our membership. Lots of questions, very particular questions to individual communities' situation, and we're trying to work through those questions and prepare an FAQ with that we'll post on our website probably the next week, and that'll be a growing, evolving document. And I'm sure National League of Cities is preparing the same type of FAQ with examples of what other communities are doing.
And we've had a couple more questions come in that are kind of that specific nature, Kurt, and noting the time and the materials we want to cover, I think we'll defer those, and those are probably the exact types of questions you're looking for. So who can those be directed to?
Yeah, so anyone on league staff. So yeah, it could be Jerry, it could be myself, and you can find our emails on our website. Just go to staff and send us those questions, and we'll forward them to both of us. Will forward those to Tony, and she can. No, but we will share those and work on as staff as a team to try and answer those very specific questions.
Yeah, and just to give you one central email address, just go ahead and use our general mailbox, which is league@lwm-info.org. Just the word league@lwm-info.org. That message, Sandy Scott will get that to Tony Herkert, and Tony will get you an answer in fairly short order. Just be aware that Tony is, she's doing the duck swim thing, right? She's looks very serene above the water, but below the water is paddling like mad. And in some of these, we don't have the answers yet. The National League of Cities did a great job working with the Treasury Department before the guidance was issued to try to anticipate questions. But at the end of the day, there is just no way that every potential, when you're dealing with 19,000 local units of government from New York City to Big Falls, Wisconsin, you're not going to catch them all. So this is going to be an evolving process. Speaking of evolving processes, shall we shift gears?
Certainly.
We're going to do an overview right now. We're in the middle of the month of May in an odd-numbered year. And what that means in Wisconsin is the state legislature is debating the state budget, which includes transportation aids, which includes shared revenue, and a number of other things. There's a lot of interest in eliminating personal property tax, among other things. So, Kurt, I know you've sort of got this all laid out in an orderly fashion in your head. So why don't you tell us that everybody in Madison is getting along really, really well. They're working in a bipartisan fashion, and they will produce a budget that makes cities sustainable for the long term. Go.
All right, Jerry, I think I have to say the opposite of everything you just said. So just so we know that we're all on the same page, the legislature, this 21-22 legislative cycle started in January. The first 6 months of a legislative session are often devoted to preparing the state budget. The goal of the state legislature, the governor, is to have a budget prepared and signed into law by the end of June. And as Jerry jokingly referred, there's actually sharp divides between the parties. I don't think that's a shock to anyone who's participating in this event this morning. So what does that mean for a divided state capital for municipalities and for the state budget? So we expect fewer laws to be passed overall. Last session, we also had a split party control of the Capitol, and there were 185 acts enacted, which is on the low side. It's not the lowest, but it's on the low side. And I don't expect this legislature to exceed that number. Divided government is usually good for cities and villages in that there's less of an opportunity for the legislature to enter into our world and make life more difficult for cities and villages by taking away our powers or reducing our abilities to make decisions locally. So that's good. There are a couple areas where we think that the governor and the Republican-controlled legislature will see eye to eye, and some of those do impact on local governments. And so one area where we expect bipartisan support is with transportation. Last session, both the governor and the legislature saw eye to eye on transportation, and we anticipate that to be the case this year. So we're hopeful for continued investments in general transportation aids and also the reauthorization of that expansion of the local roads improvement program, which many communities applied for and attempted to receive a grant last time. We hope to see a similar $90 million boost into that local road improvement program this go round as well.
Well, and one of the things we're working with, sorry, Kurt, we're working with the Secretary of Transportation, Craig Thompson, and they were very pleasantly surprised. I think all of us were very pleased with the sort of minimal red tape of that demonstration program. And they're trying, again, we're public sector, so we have to be very scrupulous about record keeping and whatnot. But there is an effort underway to try to take the lessons learned from that program into LRIP, into the local program, to simplify some of the paperwork requirements that you have. I'm not going to make any broad promises, but I do think that it was sort of a refreshing eye opener for a lot of people at DOT, and they're trying to move that forward wherever they can.
So focusing on the state budget, the governor introduced a budget in February. It contained a lot of our priorities and addressed a lot of our wish list, everything from shared revenue to adjustments to levy limits to increases in other programs that send dollars to local governments. But that budget was set aside. So once the legislature, through the Joint Finance Committee, began preparing its budget, they set aside the governors and said, we're going to start with the current state budget as our starting point, and then amend that and go from there. And then we will send the governor a different document than what he introduced. So that's where we're at right now. The Joint Finance Committee, which is made up of 16 individuals, 12 Republicans, 4 Democrats, 8 from the Assembly, 8 from the Senate. And they are working line by line, agency by agency, in preparing their version of a state budget. And the votes on that, the committee's actually, passing budget amendments and putting together the document just started last week. And the way this usually works is Joint Finance Committee starts with the easier agencies, the less complicated, the less kind of partisan differences, and then moves into the more difficult and more likely to be partisan differences stage, which again, they're all with the goal of working towards a document that both houses can pass by the end of June and present to the governor. So our priorities are, you're very familiar with our priorities because typically year in and year out, they're the same. So we would like to see an increase in shared revenue. We haven't had one in 20 years. It's been incremental cuts to that program for the last 20 years, 94 million actually. And the governor had proposed a 2% in both years of the biennium, so a 2% increase in 2021 and a 2% increase in 2022. We have a Republican senator, who's going to introduce a motion very similar to that to try and have that included in the legislature's version of the state budget. We're not sure how much support she has among her fellow Senate Republicans, and we haven't really found a champion yet for that motion on the Assembly Republican side. So we continue to work on trying to convince the legislature in this year of local governments receiving a lot of federal dollars to also increase shared revenue. And it's an uphill battle to try and convince legislators that the two are completely different, that shared revenue is a long-term commitment by the state to financially support local governments, and that money is used in our general fund to help pay for local services like police and fire and libraries. And the federal dollars are, one-time money that should be used for, one-time purposes, not in our general fund. So those are the discussions that are going in that area.
Yeah, and just if I can just, forgive me, Kurt, let me just build on that just a little bit. First of all, if you happen to be the brother-in-law or sister-in-law of an Assembly Republican who is on the Joint Committee on Finance, please call Kurt or Tony immediately. We need to talk to you.
Yes.
But it was ironic that the Speaker of the Assembly, Robin Voss, very intelligent man from down in the Burlington area, issued an op-ed, an opinion piece on ARPA, the federal money. And in his opinion piece, he was saying to local governments, please be wise about this. Don't use federal money, this ARPA money, this one-time money, to balance your budget. But frustratingly, what we're hearing from his legislative Republicans on the Finance Committee is, oh, you're getting ARPA money. You don't need more shared revenue. Those two messages are inconsistent. But the other thing that I want to say here, and that I will keep saying again, is the real difference for the league is you. We need you to be contacting your legislators. The shared revenue program is a big part of the state budget. It's one of the top, Kurt, 7 programs in the state budget. It's one of the largest. So it's a lot of money. It is a challenge for them to fund every year. So they need to be told at the local level, and frankly by you, that it makes a big difference. So forgive me for interrupting, Kurt.
No problem. I'm glad you emphasized those points. And I was just going over our priorities that we've communicated to the Joint Finance Committee and other legislators. So in addition to shared revenue, levy limit flexibility, very difficult conversation to have philosophically with the Republican majority, but we're asking for at least a 2% minimum allowable increase if you're not experiencing any growth in your community, which there are hundreds of communities in our state over the last several years who have not experienced any net new construction, and their budget, their allowable growth in levy is stagnant. There's some other technical changes that we're seeking to levy limits. General transportation aids, obviously we're asking the legislature to increase or continue their investment in local transportation aids, which they seem willing to do. And then we're also looking at asking legislators to increase funding for a program that's designed to reimburse municipalities for the services we provide to state facilities that are located in your community. There are about 361 municipalities that receive money under this program. It's called the Municipal Services Program. It's been chronically underfunded at the amount that's the funding right now is sufficient to reimburse municipalities to cover about 34% of municipal costs of providing police and fire to state facilities. And so we're asking the state to really come through and fully fund that program. That's a real quick overview of our priorities as far as the state budget goes. And before I move off the state budget and talk about some other independent pieces of legislation that we're working on, I was wondering if there are any questions, Todd, that have come in about the state budget.
We've not had any yet, although I've got one I'd like to ask Kurt. There was a provision in the governor's budget bill that I think was actually a carryover from a workforce housing bill that I think was approved in the Assembly, but then wasn't acted on by the Senate when they had their COVID adjournment. And that would have extended the life of tax increment districts for up to 3 years for affordable housing. And there are also some adjustments to mixed use districts in terms of the allowable amount of newly platted residential, as long as it was for workforce housing. And I saw that had got cut by joint finance. You're hearing anything on whether that may find its way back into the legislature's budget, or whether that might have someone that's willing to step up and be a champion for that?
So I doubt it will resurface in the legislature's budget. The one thing I should inform people about is that the legislature is taking a very minimalist approach to the budget, because they're very, skeptical and don't want to present the governor with opportunities to modify policy that they insert in their version of the budget through use of his veto power. He has, Wisconsin governors have extensive line item veto power with respect to fiscal bills like the budget bill. And so the legislature is really focused on not including policy items like what you just mentioned. So I don't anticipate that'll be resurfacing. Representative Brooks, who was the author of that piece of legislation last year, is still interested in pursuing it as an independent piece of legislation. And we're still on board with other stakeholders like the realtors. It'll be tough going through the Senate There are some, Senate Republicans who are skeptical of expansions of TIF, and that'll be a difficult battle.
Yeah, what makes Kurt and Tony's jobs even more complicated is in Wisconsin, the governor has very broad veto authority. And I think, if you read the newspapers in Wisconsin, this, governors can, to an extent, rewrite legislation from what was intended to something that no one had thought about before. So even though there's probably a lot of support for the affordable housing provisions in TIF, what you have is a bunch of guys in a back room with playing a crossword puzzle with the words, saying, well, if we put these words in here, what happens if he takes out every third one? Or what happens if that's why Kurt talks about the Republican leadership being skittish. It's a bit of a cat and mouse game that kind of goes well beyond what you would think is the issue in play. Kurt, I've got a question for you. The state's fiscal year begins July 1st of this year, and funding formulas, transportation aids, it's all driven by that. Sometimes the budget gets done on time, other times it doesn't. What's your Ouija board tell you this year? Will it be done on time, or will there be a delay?
Well, last year, all the Capital Insiders said there's no way that the budget's going to be done on time. We won't see a budget until, in the fall. And it surprised everyone that the budget was actually signed into law relatively soon after July 1st. I tend to think that's going to be the case this time. I think the legislature will send the governor a document that, again, will have some items in there that he likes about transportation, maybe school aids, enough to make him realize that there's more political uncertainty vetoing the entire document than using his line item veto to try and make it more like something he likes and then signing it. So that's my best guess. It'll be close to July 1. I think it'll be done.
Okay. Well, I think unless some questions have come in about the budget, I would ask Kurt to use the time that we have left to look at some other legislation outside of the budget.
Yes.
Yeah.
So
in the meantime, we work on other bills that we're trying to advance through the legislative process or stop. But so some bills that have drawn our attention right now are there's likelihood, there's lots of momentum and support within both the Assembly Republican Caucus and the Senate Republican Caucus for a complete repeal of the personal property tax. Now, that's been the case the last couple sessions. There's been lots of support, but what always bogged that legislation from proceeding, what always stopped it from proceeding was concerns about the fiscal impact of setting aside dollars to reimburse municipalities for that lost revenue as a result of repealing the personal property tax. So the legislature always came to the conclusion this is just too much to bite off in this budget cycle. That might not be the case this time. So because the state is in a much better financial situation than everyone anticipated, and there might be sufficient dollars, especially because of the federal money that's coming in. So anyway, I'm just giving people a heads up that that could happen over the course of the next 4 months. A piece of legislation might proceed that eliminates the personal property tax. Now, the good news is the authors of that legislation have been in contact with local governments, the league, the towns association, the counties, and they're working with us on kind of technical concerns that we have, and also the money side, and making sure that the pot of money that they put together to reimburse and hold municipalities harmless is sufficient, and there is no sunset on it, and ideally that there's some kind of inflationary indexing included so that pot would increase. Now, they have not committed to that last part yet, but they know that they have to make local governments happy if there's any chance for the governor to sign it. So it's a moving document, it's evolving, and I just wanted to let people know that that's more of a possibility this session than it has been in the past.
Kurt, what's the likelihood of that getting slipped into the state budget at the 11th hour?
I've been told by the authors that they're fearful of doing that, including it completely in the budget because of the governor's ability to manipulate it with his veto pen. So they're thinking of a two-part strategy, including somehow the dollars in the budget and then a separate piece of legislation with the details about how it's going to be done, or vice versa. I can't remember which, but anyway, there's some strategizing going on among the Republicans to try and work around their fears of the veto pen.
And just, I can hear about half of our audience going, well, wait a minute, did you think of this? What about, now you know why we talk to Todd Taves every week. Todd has been indispensable, and his people have been terrific in saying, keep in mind what happens to TIF. Keep in mind what happens to, TIF projects that have already been approved. I mean, we recognize there's a lot of political desire to do this. In fact, a lot of our own members want to see the personal property tax, not the money, but the process go away. It is a very tedious, time-consuming process for the revenue it generates. But, I want to reassure the audience that we have our better angels in the form of the Ellers people sitting on Kurt's shoulders saying, Kurt, think about this. Kurt, ask him about that. And it is a complex process, but I think we've got all of the foreseeable problems that we foresee covered. How's that for an answer? And I think we've hit upon as many as we could imagine as well.
There are some other bills that I could talk about. What's our timing, Todd?
We've got up to 30 minutes if need be. So we'll.
Okay.
You have the floor.
Okay. So I'll go over some other bills that we've been working on and mention those, fairly quickly. So another bill we've been working on, this is a leftover from last session. Because of COVID, the Senate didn't meet on its last scheduled floor period last session, and a lot of bills just died as a result. So one of those bills was ours that would have ensured that personal property aid payments that are currently being made to a TIF district transfer over to the municipality and other taxing jurisdictions when that TIF district closes or terminates. That bill is moving forward, and it will also, it's been amended to apply retroactively. So if your community had a TIF district that closed between 2017 and now, and you're wondering, and the personal property aid payments being made to that district just went away, this bill will retroactively apply so that you would start to receive the personal property aid payments that should have transferred from that terminated TID to you and the other taxing jurisdictions anyway. So, there's some potential amendments down the road that we might have to circumnavigate, but I'm anticipating that this bill could pass both houses in June. That's the goal anyway. We're working on a small bill that would just pertain to villages, and it would allow village board members, trustees, to be hired and paid as employees of the village up to a certain, and the payment would be limited to $15,000 annually. This bill would mirror what current law already exists for towns. So a town board member, for instance, could work for the town and fill in for someone who's sick or missing or quit or retired, and work for the town for a period of time up to $15,000 annually. The same language we're looking to apply to village board members as well.
And in case you think this is purely theoretical, I happened to be up in the village of Kikoski last year, and the village board president, we were talking about various village services and street maintenance and whatnot. And he said very matter-of-factly, well, yeah, we mow twice a year. And I said, well, who does that? And he said, well, we do. I said, well, who's we? And he said, well, I take my turn on first week of the month, and then it's this village trustee who takes the next turn. for a lot of our smallest local governments, government is definitely a part-time operation, and there either simply aren't the resources available or they're not the people available to do this work. And this mimics town language for those little village governments.
A couple
and
other
they won't let me run the lawnmower. I've already asked.
Thank goodness. All right, so a couple other bills we're working on. One would, and we have an assembly author for this, Representative Brooks, and we're looking for a Senate author. And this bill would addresses property tax refunds that communities sometimes find themselves having to give. So if a assessor, is determined to have overassessed a property, or a property successfully argues to a court that they are really tax exempt and shouldn't be paying any property taxes, under those circumstances, the municipality then must refund the property taxes that have been paid, or a portion of those property taxes. Right now, a community that a city, village, or a town that finds itself giving a tax refund can turn to the other taxing jurisdictions like the county and the school district and say, you help us pay this tax refund back. So collect some of their proportion, those other taxing jurisdictions' portion of that tax refund, so it doesn't fall exclusively on the shoulders of the city, village, or town. We cannot do that, however, with the interest that is owed on those tax refunds. That falls exclusively on the shoulders of the city, village, or the town. And sometimes that can be a lot of money, depending on how large value of property we're talking about and how long the tax refund goes back. For instance, Wauwatosa has just found itself required to pay back a tax refund, I think, to a medical office building or clinic, and the interest alone was $70,000, and that's all on the city. So this bill would say the municipality can turn to these other taxing jurisdictions and have them contribute to the cost of the interest as well. And the bill also modernizes the method for calculating interest. Right now, the language is from 1987, and it results in roughly a 10% interest rate on tax refunds, which is way higher than anyone else is paying in interest right now on anything. So this would tie it to 6-month treasury bonds instead of the current language. So that's a bill we're high on, and we're hopeful for, and we're looking for a Senate Republican to be the author. One other bill I wanted to mention was we call this closing the incorporation loophole, which allows. This is a strategy that has been used for the last 5, 6, 7 years, maybe longer, where a town is unable to incorporate its entire acreage or territory, and so the town will focus on kind of the denser area where there's more population and more commercial activity and it meets the standards of state law for incorporation. Then the new village that's incorporated will turn to the remainder of the town and either typically use some kind of boundary agreement process to bring the rest of the town into the village. So all of a sudden you have a large, maybe 36 square mile village right on the border of existing cities, villages, and other towns. And it catches people in those other surrounding communities by surprise and cuts them off from further growth in that direction, those neighboring communities. So we're proposing a bill that would say that when a town incorporates and becomes a new village, that village is unable for 5 years to reach out and bring in the town remnant using annexation or boundary agreements for a 5-year period. You could still use your annexation powers or boundary agreement to bring in up to 50% of that territory, but not the entire town. So it's just a method to kind of incrementally make these changes, these major boundary changes, instead of all at once. So that's a bill. We have an Assembly Republican author, and we're looking for a Senate author on that. So those are some ideas, or just wanted to give you a sense of some of the other bills we're working on. At the same time, Tony and our staff is focused on a lot of water-related issues, including PFAS and stormwater rules that are being updated by the Department of Natural Resources. So we're spending a lot of time focusing on that too. And also some public utility, water utility bills that are working their way through the legislative process. So, that's really a quick overview of some of the issues that we're focusing on. You might be thinking, well, all I'm hearing the legislature talk about or focus on are law enforcement changes to, police policies. There's a lot of activity and discussion about that, and election law administration changes. For the most part, we've stayed out of the election law administration discussion. And unless our clerks through the Municipal Clerks Association tell us that, yeah, this is really bad, it's going to, grind up our process considerably, so we will oppose under those circumstances. Or if the clerks tell us that a proposal makes a lot of sense, this would create some efficiencies, make our life easier, we will support. But there's a lot of bills relating to election administration that fall in between those two, and we're just kind of watching the partisan back and forth on that, knowing that the governor will likely veto most of those bills, and then we can maybe start and have conversations about, well, are there some things we can do to improve the election process? And then the police policies bills, we've opposed a few of them, but otherwise have supported most of them. The ones go ahead, Todd.
Oh, go ahead, Kurt, if you want to finish that.
I just wanted to say that, the two that we oppose, just to let everyone know, there's a bill in the collection of bills that are being considered right now relating to police and law enforcement operations and policies. The two we oppose would require municipalities require municipalities to continue to spend the same amount they are currently on police. And the penalty for spending less would be a reduction in shared revenue equal to the amount of cuts that you make to your police budget. And we just find that, offensive that the state needs to interfere and tell us how to make financial decisions with respect to our budget and our operations and our services delivery. And so that's, and the other bill that we're opposed to in this collection interferes with how Madison and Milwaukee operate their oversight of their police departments through their police and fire commission, and again enters into the world of local government that in a way that we don't think the state legislature should. So that's just quick overview.
And before we get to Todd's question, Kurt, are either of those two bills likely to become law?
No, I would anticipate the governor, if they pass both houses, I would anticipate the governor would veto those.
Todd, you had a question.
We had a question come in, and before I pose that, I'll just remind our audience as we're nearing the end of our time here together, if you do have questions for Jerry or Kurt, this would be the time to go ahead and get those in. So the question was, whatever happened to the dark store loophole?
Everybody asks that question.
Yeah.
I think basically our PR campaign convinced the judges out there that our arguments were right. Essentially, in the current makeup of the state legislature, dark store legislation will not pass both houses. Legislative leaders are very sensitive to the desires of big business and are very unlikely to schedule a bill that would make a significant change in dark store. But at the same time, most of the challenges that have turned into legal challenges, frankly, the municipality has won. There was just a big case coming out of Plover that involved a Lowe's lumber yard, a Lowe's retailer, and that was Lowe's appealed it all the way to the Supreme Court and lost. The appeals court, the circuit court agreed with the way the city appraised it. The appeals court agreed with the circuit court, and the Supreme Court said, we're not going to get involved, which is a win. So our message, and frankly, the message we've gotten from attorneys is, to be honest with you, we don't want to engage in a legislative negotiation where we might have to give up something. We would rather leave the law as it is right now. So it's both a pragmatic political answer, but it's also an answer that our attorneys are saying, unexpectedly, we're kind of in a good place in the courts. Kurt, would you add anything to that?
No, other than we're encouraging communities when they're presented with a challenge by a Walmart or a big box store to stand by their assessor and choose to litigate, because at the circuit court level, there's been numerous wins by municipalities that make that decision. And we have, in addition to the Court of Appeals decision that Jerry mentioned involving the Lowe's in Plover, there are at least two others that are before the Court of Appeals that we anticipate decisions in shortly. And we're set up nicely to have the court side with the municipality and the assessor and their determination. So it's the litigation strategy is winning on dark store.
One of the league's objectives is diversification of local revenue sources. And I probably know the answer to this question already, but just interested in getting your comments on, any sort of openness or potential for that. Specifically, there was a local sales tax option that was included in the governor's budget that fell to the wayside.
And I'll take this first, and Kurt can fill in the blanks. Nothing is going to happen in the current legislative session. That issue gets wrapped up in the interplay between the Republican legislative leaders and the Democratic governor. And the fact that the city of Milwaukee was the proponent of that sales tax proposal was just not going to fly through the current legislature. Privately, we have been told by a number of significant Republican players that this is a conversation that they're willing to have, but it's not it's a conversation that's going to have to extend through the 2022 elections. In other words, we have to get past the governor's reelection before they will have a serious conversation about it. I think what we're going to be doing in the meantime is setting the stage for that conversation. I don't think legislators appreciate just how up against the wall some local governments are in Wisconsin. And I think, like we did with Dark Store, we need to sort of step up the conversation to set the stage for when we finally start talking about it. So was that a non-answer? I mean, it wasn't meant to be a non-answer, Todd. The answer basically was spring of 2023.
That's a good answer.
A very, very serious conversation.
Kurt, I'll give this one to you. We had a question come in. So this relates to the bill you talked about a few minutes ago on the distribution of the personal property aid after a TID closes. And so the question is when the TID closes, will that personal property aid as well as the computer aid that municipalities had previously been receiving, does that need to get distributed to the other taxing jurisdictions if allowed to be paid to the local government?
Yes. So that's what AB 56 does. It was a compromise. DOR insisted that currently, as you know, computer aid just goes to the municipality once the TIF district closes. And DOR never thought that made a lot of sense, and it is hard to justify. And so after this, if this bill passes, then in the future, when a TIF district closes, the computer aid payments will flow to the municipality and other taxing jurisdictions. This does not, but this does not retroactively apply. The computer aid component does not retroactively apply to TIF districts that already closed. But the personal property aid payment component does retroactively apply.
Thank you. A question that I have, as you had mentioned earlier, Kurt, in terms of the Senate Republicans, there can be some difficulties there in proposed bills that involve expansion of TIF. On the flip side of that, are you seeing anything that gives you a pause or concern about things going the other way? It seems like every session something tends to come up where we need to play defense on TIF. Any prognostications about that or concerns we should be aware of?
Well, the same senator or senators that have been skeptical of TIF in the past have their package of bills, their wish list. They have not introduced, but they've shown us, the drafts. But there are other members of the Senate Republican caucus who are more supportive of TIF, and so there's this kind of situation within their own caucus where I think they're keeping each other from proceeding. So some would like to enhance TIF, and others would like to maybe, bring more limitations on TIF to bear. And right now, neither one of those sets of bills have been introduced, and I suspect that'll probably be the case throughout the entire session.
Yeah, and if it's not, Todd, I think the risk is that there will be, you give a little, I give a little. There'll be a desire to do some horse trading. We're watching very carefully for that. There are some specific things that we're willing to horse trade. There are other things that, you can blow the whole thing up if you're not careful. But we're keeping a pretty careful eye on that. And right now, the advantage that we have is both sides, as Kurt said, they're sort of hamstringing each other right now. So nothing good, but nothing bad either.
Well, I have no further questions in the queue. So before we adjourn, I'll just ask if you have any last comments that you'd like to offer to the audience.
Jerry, do you?
Oh, always. I'll never give up a chance for a last word, but I want to give the last word to Kurt because he is, I keep telling him that he is the heart, soul, mind, and memory of the league because he has such tremendous knowledge, but more than that, he has a phenomenal reputation in the Capitol as a well-informed and honest broker, if you will. So it's a huge advantage. I think we're very fortunate to see Tony Herkert become part of that team and extend Kurt's range even further. I do want to thank you again, Todd, for the work both on camera and off camera, right? For your work with municipalities, but also the tremendous volunteer work you've given us. The last thing that I do want to say to those of you participating today is please stay available. If you have a relationship with a legislator, I frankly don't care if he or she is a Democrat or Republican. We need those local relationships. Invite them to your meetings, participate with them, but talk about these issues with them. Talk about shared revenue, talk about levy limits, talk about TIF, talk about personal property taxes. Again, if you disagree with the league's position, I'm not even sure I have a problem with that. We will call upon you to talk with your legislators because at the end of the day, they're representatives. They use that word for a reason. They represent your community. They represent the same constituents you have. And in order for the league to pass these law changes, which ultimately the goal is to make your job easier, we quite often are going to call on you for help. So thank you in advance for answering that call. And I think I'm going to cede the absolute last of my time to Kurt Watinsky.
I just want to follow up with what Jerry said and publicly thank Todd and the Ellers team for always being available to respond to all kinds of questions that are technical in nature. And I appreciate your quick responses always in over the years. So it's great working with you. Thank you.
Well, thanks both of you. And, likewise, we appreciate everything you do for local governments in Wisconsin. And I know we're taking your time away from those efforts in a busy portion of the year here with the legislature. So really appreciate you taking the time and spending it with the audience this morning. And for our audience, a copy of today's presentation as well as a recording of the session will be posted to your virtual attendee hub for future reference. We're always interested in learning how we can make your experience more dynamic and deliver content that is most valuable to you. I would ask that you fill out a very brief survey for us. You can do this in one of two ways. On the right-hand side of your screen, there is a survey button under the chat and Q&A buttons. You can click on that survey button right now to take the survey. But if you don't have time, you will receive an email with a link to the survey tomorrow afternoon. We do hope that you'll take the time to give us your thoughts on what we did well and what we could do better. And please consider joining us on June 2nd for Nuts and Bolts of Financing, an informative session that will cover the basics of municipal debt issuance. Again, thank you for joining us and enjoy the rest of your day.